Hello and welcome to our twice-weekly Commodities Corner programme. In today's interview I'm speaking to Daniel Briesemann, a Frankfurt-based commodities analyst at Commerzbank, about the effects the continuing US shutdown is having on the base metals group. While Mr. Briesemann joins me now, there's been a lot of talk surrounding commodities trading regulations recently. From oil to iron ore, a recent survey suggested benchmark prices are often wrong by almost as much as 30%. Most of these raw materials are bought and sold in private. We'll come on to the US shutdown in a moment, but do you see an increase in regulations hitting the commodities market?
Well, I don't think that this will have an impact in a short period of time. I think this is more an issue for the mid to long-term view. There will definitely be more regulation on the commodities markets. It will start in the US. I think JP Morgan just started selling their commodity business. They are waiting for offers right now. And it will be very interesting to see how it works out. But as I said, I don't think that will have an impact in the short term.
What sort of effect is the partial US government shutdown having on base metals at the moment? And what's your view on a dollar recovery denting the metals group in the coming months?
I think these are two different aspects. One is clearly negative, or has been clearly negative for base metals prices. The other one would be positive. So the U.S. budgetary dispute and the debt ceiling coming closer has been weighing on base metals prices, or at least has been preventing them to make considerable gains. But if the dispute would be resolved, then I would think this is clearly a positive sign, because there would be at least some risk-on mood again on the financial markets in general and on the commodity markets in particular. Also, I agree with you that we will then probably see a stronger or firmer US dollar, which might weigh a little bit on the base metals prices.
Now, there have been some warnings from analysts that copper demand may fall, despite a renewed acceleration of growth in China. That's quite surprising. Do you agree with this statement? And if you don't, why?
I don't agree with it. I have other information. The Chinese economy looks quite robust, and I wouldn't be surprised to see a relatively strong GDP data at the end of next week. In addition, demand is recovering somewhat in Europe, and I can also see a relatively robust demand in the US. This is all due to recovery in, for example, the construction sectors and the automotive sector, for example, as well.
Of course, we had the London Metal Exchange's annual industry gathering recently. You were there, I believe, Mr. Briesemann. Was supply and demand a key discussion area at the event?
Well, we had our own event there, and I took part in it. Supply and demand was clearly a discussion we had with our clients. And let's say they are very relaxed. What I want to say is new supply is coming onto the market, and our consumer clients are very relaxed because they think prices will stay low for the next few months. But what I can also say is that supply and demand won't probably have much or a great impact on the prices.
Finally, which base metal are you keeping your eye on the most at the moment, and where would you advise investors to go amidst these concerns in the US?
Well, I would advise to invest in lead, maybe in zinc as well. And I'm not that pessimistic on copper because I think despite new supply coming onto the market, the global copper market is much tighter than many market players think.
Okay, thank you for joining me for the last Commodities Corner of the week. The programme will next return on Tuesday. Keep track of all your commodities news and guests by heading to our forecasts and analysis section on the Dukascopy TV homepage. I'll see you next time though. Goodbye.